right, great numbers coming in from Colgate-Palmolive. Very strong Q4 and above street expectations for the most. What's really interesting from the commentary from the management and in the post-earnings con call, etc., is two things which stood out. Rural has outpaced urban in this quarter. That's a trend that we've seen across the FMCG space as well. Your margins have improved as well, so that's been quite robust. To get more sense of the quarter gone by and the outlook for the next financial year, I'm speaking now with M.S. Jacobs. He's the CFO of Colgate-Palmolive. Mr. Jacobs, welcome, and thank you for speaking with us here at NDTV Profit. Great to have you on.
Thank you for having me.
Yeah, absolutely. So now you've hit your highest ever EBITDA margins at 35.7% in Q4. I'm trying to understand what has been the biggest contributor to this. Is it largely just a reduction in raw material costs?
Yeah, I mean, our margins have been on an upward trend, and pricing is obviously a key driver as in prior quarters. But what's happening is also we're seeing input prices have started moderating, and in fact, we've seen reduction also in some of the materials. So between the two factors, the margin has been up. Of course, it's a bit softer, the gross margin, than the full year levels, but very encouraging nonetheless.
That's right. So Q4 was relatively softer. Of course, the full year's picture looks robust. What is the reason for that softness in Q4? Anything specific that we've missed out? Is it higher advertising promotion cost or something else?
No, I mean, there has been a moderation in margins quarter on quarter, and we hit record gross margins in Q3, 72 plus levels. We don't expect to hit those kind of margins. So this is just a normalizing of the margins that we should expect.
Okay. So a higher base effect in a sense. What is the kind of outlook that we see for Q1 FY25, and if you have some kind of a picture for the year? Because I'm trying to understand if your raw material softness is going to sustain, and if you see some of these factors sustaining.
So we continue to see it's quite benign, the input price increases, and also, combined with the cost savings program that we have called the Funding the Growth program, we expect to offset any increases that we are likely to see in the next few quarters through the cost management programs. So, we are not targeting any particular level of margin increases. We believe we are in a good sweet spot right now. It gives us the room to invest behind our brands, up the advertising, invest behind superior products and technology. So it does give a lot of room to us, and our objective this year would be to capitalize on that rather than target any definite increases in margin levels.
Okay, so we're seeing margin growth steady at the same levels?
Yeah, I would say by and large, current levels of gross margins. EBITDA would be a bit up and down because we would calibrate the advertising investment, given one, there is momentum building in the business on the oral care side, and we will continue to lubricate that side. And we've also referred to the emphasis on growing Palmolive. We've put new ads on air right now, so we're going to continue to back that. So that is the piece that will stay variable depending on the quality of advertising, the response to the advertising we put out there, the plans we have for the personal care category, etc.
So your advertising, for example, was up 20% for this year. Do you see that increasing in any substantial way for the next financial year?
Yeah, I mean, it would all depend on how the market or consumers react to what we are putting out there. Just a target on advertising number itself may not be the right one to call out. It would need to be really productive advertising. Our biggest objective is the top line growth piece, and that's one we are really focused on more than anything on the P&L right now. And if it needs a higher level of advertising investment, we would definitely be willing to consider that.
Okay, so for that volume growth focus, Mr. Jacob, give us a sense of what has changed. So Q4 has seen a sort of a positive change for the oral care segment. I mentioned right in the beginning that rural has been a driver. Give us a little more detail on this. What has changed on both these aspects? And do you see this as a definitive shift?
Yeah, I mean, the category volumes have been picking up over the last few quarters, more driven by urban. But in recent months, we are also seeing urban is kind of joining the party. And, we called out in the analyst presentation that we are growing faster in rural than urban. So there is some optimism in rural with, inflation kind of moderating. There is the future seems to be good with monsoon news seems to be indicating normal levels of monsoon. So there are positives there. Overall, the category is growing. As things stabilize elsewhere. And as you also know, we have a big thrust on consumption building in the category. We are running the brush twice a day campaign, and we've been spending a big proportion of our media budgets on that, and it's running across platforms. And you've probably seen during IPL also on Geo Cinema in the second match, we do show some of the prominent commentators being part of that campaign. So there is a lot going on in that area. Of course, that will gradually help build volumes, but there are multiple factors coming together for this.